gold, as sound as it is and as good as it is, we increase the supply by 1.7% every year, 45, 50 years, we'll have twice as much gold on the planet. So, Bitcoin, there will only ever be 21 million, so it's a natural deflationary money. In fact, a small fraction of the world owns Bitcoin today, but I believe that fraction will grow as more and more people come to appreciate its monetary properties. When Bitcoin got invented, what they did was they created absolute digital scarcity. The first time, really in the history of mankind, we actually have a form of money that will not be diluted.
When a seasoned gold investor says Bitcoin is the most asymmetric bet he's ever seen, it's time to pay attention. Larry Lepard, a longtime advocate for sound money, has spent decades defending gold. But today, he's placing his biggest bet on Bitcoin, not just as a hedge against inflation, but as a revolutionary force for peace, freedom, and financial truth. In this episode, Larry breaks down why Bitcoin outclasses gold in a digital age, how its absolute scarcity changes everything, and why we may only just be scratching the surface of its potential. From volatility to valuation, he doesn't shy away from the hard questions, and makes the case for why this volatile asset may be the single most important innovation in modern monetary history. If you've ever questioned Bitcoin's long-term role, or wondered whether now is still early, this is a conversation you can't afford to miss. Make sure to like, subscribe, and drop a comment with your thoughts. Has Bitcoin already proven itself, or is the best still ahead?
Because in the book, you say, quote, Bitcoin is the single most asymmetric bet I have ever encountered. Now, that's a major statement from someone who built their reputation as a gold advocate. I mean, you argue that Bitcoin is not just a hedge of inflation, but a peaceful monetary revolution, and even say it could end wars like you did just before. So I want to talk about it. I mean, I guess the question is, why do you believe in Bitcoin and not gold as better weapon against fiat debasement today? I mean, walk us through the mechanics of this.
Sure. Look, they're both good. I mean, the way they're both sound money. They're both money outside of the state. The state can't print gold. The state can't print Bitcoin. So they both have a lot of things going for them. Mm-hmm. Gold is analog. Bitcoin is digital. We're moving toward a digital world. And, the bottom line is that when Bitcoin came along, what they invented when they solved the mathematical problem that allowed, that stopped double spending and allowed a fixed number of something digital to be controlled and audited every 10 minutes. When that came along, it changed the game. I mean, even gold, as sound as it is and as good as it is, we increase the supply by 1.7% every year and above ground. And in 45, 50 years, we'll have twice as much gold on the planet. So, Bitcoin, there will only ever be 21 million. So it's a natural deflationary money. I believe that it has the potential to be the base layer of money because it's easier to verify. It's easier to move. I mean, moving gold around is hard. Verifying gold is not simple. There have been counterfeit gold bars, etc. And, basically, it's not transparent the way that the Bitcoin ledger is transparent. So that's the biggest difference, I think, between the two. The other thing that's going on that I think is going to drive the value of Bitcoin so much higher, everyone who wants to own gold, I mean, gold's been around for 5,000 years. Everybody knows what it is. Everyone knows it's money. It's the base layer of money. But, because of that, it's very widely distributed. It's not like it's some great secret. Yeah. Bitcoin is an emerging challenger to gold. I call it digital gold. I think it really does have the properties of gold, but it has some other properties as well. The transferability and the way you can see it on the ledger. It allows, Bitcoin is undergoing an adoption curve. And as you and I both know that, not everybody in the world owns Bitcoin today. In fact, a small fraction of the world owns Bitcoin today, but I believe that fraction will grow as more and more people come to appreciate its monetary properties. And so, in my opinion, Bitcoin will someday perhaps be the base layer of the monetary system. And it's interesting. I'm not the only one who said this. I don't know if you saw it. It was on the Twitter yesterday. Larry Fink at BlackRock, they just wrote their annual report, and they said that, Bitcoin is actually a challenge to the reserve status of the U.S. dollar. And I thought, BlackRock's one of the largest asset managers in the world, and here they are actually saying what I believe. I thought, boy, that's interesting. And so, I think it's important. I really highly suggest people who are skeptical of Bitcoin that they read my book and try and understand the argument that I put behind it. I do believe it's the most asymmetric thing I've ever seen, and And more importantly, I think that, a lot of the reasons it's been demonized have to do with kind of the crypto Sam Bankman-Fried, arm waving, promoter rug pullers in the whole crypto space. I mean, look, gold people are very sound based people who tend to be quite conservative, and they don't fall for bullshit. And so,
Hmm.
the average gold person, I think, and I count among, I have many average gold friends. When they look at Bitcoin, I know their reaction is, oh, that's all just arm waving and bullshit. And I say, well, it's a little more complicated than that, or it's a little subtler than that. All the crypto stuff, you're correct. You're dead ass right. It's rug pulls, arm waving, bullshit, fraud, Sam Bankman-Fried. But when the
Hmm.
guys who invented Bitcoin, whether it's one guy or a bunch of guys, we don't know. But when Bitcoin got invented, what they did was they created absolute digital scarcity. And you might say, well, why does that matter? Well, it actually does, because it's provable, verifiable, provable, auditable, visible digital scarcity. So for the first time, really in the history of mankind, we actually have a form of money that will not be diluted. We've never had this before, ever. I mean, even gold gets diluted. So that's different. And I think
Hmm.
it means that one has to think about, what does that mean? I mean, it'd be like asking a caveman, what does an airplane mean? I mean, he doesn't even necessarily know how to conceive of what flight is, and the notion that we're going to have a Concorde going across the country, across the ocean in 3 hours, that's way beyond his imagination. And so, I'm not even sure any of us really know exactly what Bitcoin means, but
Yeah.
what it does provide is it's a ledger that is completely truthful, honest, and mathematically based that anyone can see. And I think the implications are going to be really big for money and for other things too. So,
Hmm.
I really highly encourage people to throw off their skepticism, or throw off their, the taint that crypto in general and the crypto bros have brought to this whole area, and read some of the Bitcoin maxis, read my book, read Lynn Alden's book, read Saifedean Amos's book, and try and understand why this is actually a technology and an invention that, to me, it's like I was a big investor in the internet, and it really reminds me of the internet. I mean, and it's a parallel. I mean, it's actually the monetary version of the internet, right?
Hmm.
So, the adoption, all of it, the skepticism. People were very skeptical of the internet in the beginning. You remember Krugman saying it's no better than a fax machine. People don't have anything to say to each other. Who needs the internet? That's what he
Yeah.
said,
I mean, I've
right?
heard you debate. I've heard you debate on stage about this. We were talking about it with Peter Schiff down in
Yeah.
New Orleans when I saw you. I mean, some people would argue, Bitcoin has dropped 50, 60, 70 in past cycles. So for those who see volatility as a liability, why should they trust it as a store of value in a crisis?
It's a totally great question. What they've got to understand is that it's very early days and it's emerging. And so on very good days,
Yeah.
it's going to the moon and we can't stop it. And on very bad days, Bitcoin is dead. And Amazon is up 218,000% since the day it went IPO, and yet it went down 50% on a regular basis. After '08, it went down 90%. And so when you've got something new, untested, emerging, unproven, you have emotions run high in both directions. We got to have it. Let's push the price way up. Oh my God, it's not working. There's a risk to it. Let's throw it the hell out. And
Hmm.
so, so yes, it's highly volatile. And for a lot of my clients who don't like that volatility, I say, fine, stick with gold. You'll be fine. You'll be
Yeah.
protected.
Yeah.
But what I try to suggest to all people who I speak to is the way one, as an investor, the way one deals with volatility, especially if it has a strong upward skew. And you're right, it's drawn down 50%, 70%, 80%. But guess what? It then comes back and goes on to make a new higher high. And in each drawdown, the low that it hits on that drawdown is above the prior low. So it's trending up with a lot of volatility. And in my opinion, the way an investor deals with that is your allocation size.
Hmm.
So, would you want to put 100% of your money in Bitcoin? Of course not. That'd be crazy at any age, right? But, if it's got a positive skew over a bunch of years and you believe in the concept, can you take 4% of your net worth and put it into an asset that'll go down 50%? Sure, because you're not likely to sell it when it's down 50. You'll just hang on to it, knowing that it'll eventually go higher. And so
Yeah.
that's really, in my view, the way that investors should deal with the volatility is their allocation size. They should put
Hmm.
into it what they're comfortable having in an asset that they know can go up a lot more than gold, but they also recognize can draw down 50%, because gold has never drawn down 50% in a year or in a cycle. A big drawdown for gold is 20%, and that only occurred right after the 1980 bubble. So In general, gold is up. 65% of the time, gold is up up on the year, and then the other one third when it's down, it's not down very much.